Hey everyone, I'm Cary Smith and I'm sitting here with Amar Shah. And today we're talking about the top five risks of dividend investing. And so, Amar, historically, investing and focusing on dividends has been very popular. And, at times it's actually been very lucrative and people have been able to derive some pretty good income from focusing on dividends. But there's also risk involved, and it'd be it's just good to understand what those risks are, so that you can act accordingly and adjust in your plan.
Yeah,
So we're talking about the top five risks. What do you have as your top risk?
yeah, and I'll get to that in a sec. I think it's also there was a period of time where that all the news articles from Wall Street Journal, Barron's, U.S. Newsweek, CNBC, whatever your flavor is, was focusing on dividends, right? Because it
Right.
was very popular, right? And I think when we go through this list, I think also we should consider, even if you're not a dividend investor, do I have some of these biases in my own investment process, right? And so for the first one here, if you're an income-based investor, the number one risk is that the income changes, right? So these incomes are not guaranteed. They could be cut, they could be changed, they could be eliminated in certain cases. And that is a huge risk for an individual that's in retirement or retirement planning mode, if you will, because your lifestyle is going to change based off of this company's dividend, right? And a lot of times that is taking on too much risk for one individual.
Yeah. Okay. I think that's a good point. And to your point, if you're relying on that income, right, if it changes, it impacts your lifestyle, and you
Yeah.
you might have to make some changes.
Yeah, imagine
Okay.
if you had planned a trip, like a vacation to like a riverboat cruise in Europe or something, based
Mhm.
off this income stream for next year, and then this income stream changes. Like, are you going to change your plans?
Yeah.
Like that's something that individuals would have to juggle with.
Yeah. It's a good point. Okay. Also what comes to mind for me, another risk is if I'm too focused on one area of my portfolio, I might actually be missing out on opportunities somewhere else in my portfolio. The one that comes to mind for me is maybe I'm missing out on growth while I'm focused in on dividends.
Yeah, yeah. I mean, I think this is a huge one. I mean, I think this is the elephant in the room is that not looking at total return is you're missing out on half of the equation, right? So income plus the change in value of a company is your total return, right? And that change in value could be growth, right, oriented. So like if you had a growth company, they would have a small dividend but a large change in value, right? I think a story that comes to mind for me for this is like the MLPs, the oil and gas MLPs
Mhm.
that were paying a really high dividend. Some cases north of 12% dividend, um, and they were doing that for about a year or two, and then some news story came out, and some of those share prices got cut in half. The dividend stayed the same, but whatever dollars you had invested in that MLP, it got cut in half. And there are stories like this with like real estate investment trusts that there are a lot of dividend based companies that have had some fluctuations.
Yeah, those are some good examples.
Yeah.
So far we got, so the dividends aren't guaranteed, right? And then you may be ignoring other pieces of your portfolio by not focusing on the total return. So what's another risk that we have?
Yeah. I think the next one is just the concentration risk, right? Right. So if you're an income based investor, you tend to invest in certain sectors, and sometimes those sectors are interest rate sensitive too, right? And so you're not getting a broad uh, view of the markets. You're getting kind of a concentrated risk in those sectors.
Okay. Yeah, I can see that. You know what? I'm going to move to a fourth risk, which I think is somewhat related. So if my focus is in one area and that's where my concentration is, I may be slipping away from my risk tolerances, and I might be, either more conservative or more aggressive than I had intended to be, because I was no longer focusing on my risk tolerance as I was focused in on dividends. And so, what are your thoughts about that as a risk?
Yeah, I mean, when do you know to rebalance?
Hmm.
If you're an income investor, there's no tool or indicator like a drift from your target holdings to know when to rebalance. And so, absolutely, the portfolio you start with, the portfolio you have the next month, next year, could be drastically different, and there's no way to align that risk to what you want.
Yeah, in fact, I think of knowing when to rebalance. One of the risk if you're too focused in on dividends is you're maybe more reactive than proactive, because once you notice change in your dividends is when you start to analyze, what happened and what should you do different. And in most cases, you want to be proactive and not reactive.
Yeah, that's a great point. Hey, the last point here, taxes, right? Especially if you're in a taxable account. Um, Dividends are a form of return of capital, essentially, in the sense that the company has a decision to make. Like, we have this amount of extra income. Can we do R&D? Can we grow the business? Or do we return this capital to the shareholders, right? And returning the capital in the U.S., taxable accounts, that's ordinary income for most people, right? There's sometimes a qualified dividend, but for the most part, it's ordinary income. And so when we look at this from a planning perspective, you could be missing out on other opportunities that you wouldn't get that taxable income. So, for example, you have your Social Security, you may have pensions, but those dividends add to your adjusted gross income. And in retirement, that can impact your Medicare payments due to IRMA.
Yeah, so some people have worked hard with their planner to have a good tax strategy. And then if you're not paying attention to the impact of the dividends, it really could, throw that strategy off a little bit and have you paying more taxes than you had intended. So yeah, I think as it's hard to have a conversation about financial strategies that don't involve taxes somewhere.
Yeah,
So I'm glad you brought it up. But yeah, it's a good point.
yeah, absolutely. If you're watching our content and you like that what Cary and I are speaking about, please like and subscribe. It helps all the YouTube algorithms, helps other people find our content, and it definitely helps us out. If you want to talk about your situation or want to get in contact with us, the easiest way is to go to our website, which is clientfirstcap.com. And on the bottom there is a place to input your email or just give us a call.
All right, Amar, good discussion.
Great
Hey, thanks,
discussion.
man.
Yeah.